Ford stock is currently yielding a dividend of close to 6%, and their forward P ratio is just a little over 7. And when looking at the stock, it's performed very poorly in the past, but it's actually having a great 2019 so far, right along with the rest of the market. So is right now the perfect time to pick up this still relatively underappreciated stock, or is it a sort of value trap that isn't likely to get much better in the future? Well, in today's video, I'm going to share my opinion on all of that and a lot more. I hope you guys enjoy this. Let's get started. What's up everyone, my name is Ale and welcome back to my world of stocks. Let's go ahead and start by pulling up the stock chart, and then we'll transition over to their current issues and what they're doing to kind of turn things around with their business in the future. Okay, so taking a look at the past 5 years, we can see that they are down huge by over 40%, yet so far in 2019, the stock has actually skyrocketed, climbing by over 30% and currently sits near the upper levels of their 52-week range. Still, the valuation looks pretty attractive even at these higher levels, given that they're still trading for only 7 times future non-GAAP earnings according to Seeking Alpha. For context, the sector median is more than double that amount. And they also have some very low PEG, PS, and PB ratios as well, all of which are well below the sector medians. And the poor performance over the years has also led to a pretty attractive dividend that currently yields just a little under 6%, with a payout ratio of a little over 50%, almost a double-digit 5-year growth rate, and 7 years of consecutive growth. So just from these factors alone, I could make the assumption that this might indeed be a value stock. But of course, we can't just stop our analysis here, because there's usually a reason why a stock is trading at these lower levels, and it usually has to do with fundamental problems with the company's business. So let's take a look at what those issues might be. Well, for starters, US auto sales have been very stagnant in recent years. We can see on this chart here that we had a major rally following the last recession, but mostly since 2015, that growth has plateaued and sparked assumptions that we've reached the end of a cycle. Not to mention that predictions of a looming recession have increased in recent years, given the long time since we've had one, along with macroeconomic concerns like the current levels of debt within the country. And based on this chart here, a recession would likely crush the automotive industry even further. But another common criticism of Ford is that they just simply haven't innovated enough to fuel growth themselves. Let's take a look at wholesale deliveries in their 3 biggest markets, which are North America, Europe, and China. And by the way, wholesales are basically just the number of cars that they've sold to dealerships, but when looking at China, we can see that they've followed this pattern of plateauing before falling off a cliff last year, although to be fair, the weakening macroeconomic conditions of China haven't helped the situation either, and the whole trade war has only added to those issues. But they've also experienced a similar drop-off in Europe, who is also experiencing very difficult economic conditions themselves, and then turning to their biggest market in North America, it's all been downhill for the past 4 years. But despite all of this, Ford has still managed to grow their sales in each of those years, which I found to be a bit surprising. Granted, that growth was only about 2% last year, but it's still growth during very difficult conditions within the industry and in certain international markets as well. Although we'll see later in this video that even this very tiny growth is not expected to continue in the coming years. In any case, another major concern is that their margins have mostly been trending downward for the past couple years, and while I fully acknowledge that the automotive industry doesn't usually sport very high margins in the first place, Ford is well below the sector median in practically every margin category, while their net income has also dropped by over 50% last year to just $3.7 billion, and that's coming off of $160 billion in sales, so the margins are definitely a concern. At the end of the day, probably the biggest elephant in the room is that investors are worried about Ford's future, given the rise of electric vehicles, autonomous driving, and ride-sharing platforms. At a time when Ford and the rest of the industry has been seeing major delivery problems in the United States, Tesla has been soaring with year-over-year growth of 137% last year. I know that Tesla only delivers thousands versus Ford delivering millions, but it's still positive growth versus negative declines. As of last year, EV sales only made up about 2% of the market, but that growth is expected to surge in the future and eventually overtake traditional ICE vehicle sales, which is what Ford is primarily involved in. Globally, EV sales are expected to climb from $100 billion in 2017 to over $500 billion by 2025 at a compound annual growth rate of 22%, while the autonomous vehicle market is also expected to grow at a CAGR of over 20% through the next decade, and even the ride-sharing market is also expected to grow at about 20% through 2025 as well. And that's not even factoring the fact that companies like Uber are also working on autonomous aircraft that could carry passengers over congested traffic, and while the full implementation of that is obviously much further into the future, Uber is already planning to launch in select markets by as soon as 2023. So when I look at Ford, I just think, okay, the traditional ICE vehicle market has been relatively stagnant at best in recent history, while other markets like electric vehicles, autonomous driving, and ride-sharing platforms have all seen tremendous growth and are projected to continue seeing tremendous growth in the future because they're still in the early stages of all of their future potential. So a company like Ford needs to absolutely make changes to adjust to the shifting trends of both consumers and the overall market if they want to stay relevant. Well, we just covered their past, so let's now transition to what their future is expected to look like. So let's take a look at what Wall Street is expecting financially, and then let's also take a look at what Ford is doing themselves internally to change their overall company's business and their trajectory. Okay, well, according to Yahoo Finance, they're actually expected to see revenue declines in each of the next 2 years, both of which are also lower than what they saw 4 years ago, so that's a very bad sign. Even if we look at their EPS growth for the next 2 years, we're still talking about just 8% and 1% growth respectively. As a result, Ford, along with other auto manufacturers like GM, have been announcing major layoffs in an effort to cut costs and increase profits, which happened to tank by 34% in their last quarter year over year. There were supposed to be 7,000 layoffs by the end of summer, but a recent update added that 12,000 European workers will be let go by the end of next year, with plans to either close or sell at least 6 factories and cut production in others. On the bright side, Ford is at least trying to make some changes that should fuel growth in the future, given that they're restructuring 90% of their North American vehicle lineup to consist primarily of more popular, higher margin sport utility vehicles, crossovers, trucks, and commercial vehicles by 2020. In the US alone, 75% of their lineup is expected to be refreshed within the next couple of years. This could be a big deal given that SUVs make up the largest auto segment in the US, with large pickup trucks taking second place, both of which are Ford's specialty. And to tackle the electric vehicle market, Ford is investing $11 billion to electrify their best-selling vehicles, including an all-electric Mustang-inspired SUV that is due out sometime next year, as well as an electric F-150 truck. Keep in mind that the F-Series has been the best-selling truck in America for 42 years in a row, so an electric version should be very popular, although I'd have to assume that it could face some decent competition from Tesla's upcoming pickup truck as well. But speaking of Tesla, Ford is also trying to evolve their vehicles with added autonomous functionalities, as they are investing another $4 billion through 2030 on autonomous technologies, including $1 billion on artificial intelligence. They're also transforming the Michigan Central Station into a campus for research and development to work specifically on autonomous driving, electrification, and a transportation operating system that I believe will be part of their smart mobility segment that also focuses on high growth markets like ride sharing, shuttle services, and intelligent roads. Intelligent services in the automotive market could be highly lucrative in the future, so that may be able to bring some much needed recurring revenues and higher margin profits for Ford. They're even planning to release 30 new Ford and Lincoln vehicles in China within the next few years to help turn things around in that market as well. So with all things considered, Ford is definitely a company that is trying to make some changes and adjust to the shifting market, but they're just so far behind the curve, while a company like Tesla just continues to keep pushing forward. And look, I know I'm making this video a lot about Tesla, but the reality is that I think that this is one of the biggest industries in the world that is going through one of the biggest changes that we've ever seen. And when looking at my possible investment choices, I have on one hand a company like Ford that is behind the curve, and they're just now starting to make the changes that they really should have been doing for a while now. And we still have to wait for those changes to really be implemented in a meaningful way. While on the other hand, I have a company like Tesla that has already gone all in on the shifting kind of market trends, and they've already invested in all of this infrastructure and technologies for many years now, and they've been doing and continue to do what everybody else wants to do. But we have to be fair and unbiased here, and we have to admit the fact that Tesla has struggled to remain sustainably profitable. As a Tesla bull myself and investor, I would argue that, well, they're in the early stages of their business, but it's a fair criticism that they have struggled to be sustainably profitable, and they're delivering thousands of vehicles, while Ford has been sustainably profitable and they deliver millions of vehicles. So they're just at two different stages in their kind of business life cycle. And so I can understand why some people would feel that Ford is a safer investment. But for me, someone who is always kind of looking out into the future and who cares a lot about growth, as a growth investor myself, I tend to care more about a company like Tesla. But we'll have to just see what happens. I think overall the EV market will be big enough to support multiple players. And look, if Ford really goes all in on making some electric SUVs and trucks, I think those could sell very well. I think they definitely have a dedicated fan base, at least here in the United States. I can't really speak to international markets because I live in the US, but here in the US, I do feel like a lot of people do love their Ford SUVs and trucks. But as someone who has already invested in Tesla, who is already getting my exposure to the automotive industry through Tesla and also NIO, it's not really a stock that I like to talk about, but for obvious reasons. But I just don't really feel like I need another automotive stock. But hey, that dividend is attractive, that valuation is attractive, and I definitely do like to invest in companies that are going through transitions, because a lot of times investors will not believe that these companies can turn things around, and sometimes those are the best times to buy stocks. I'm not so sure about Ford, already climbing over, what was it, like 30% this year alone, so they have kind of rebounded quite a bit. It would have been nice to pick them up a little while ago, but it is very similar to like a company like AT&T, for example, where I started buying AT&T stock because nobody thought that they could turn things around, and we still have to wait and see if they really can turn things around. But I like to give a chance to some of these companies that have proven that they can be successful in the past, but are going through issues right now, and they need to transition their business, because we tend to be able to get a cheaper price and oftentimes a very nice dividend for those type of companies that are transitioning. In any case, Ford is just not a stock that I'll be investing in, at least not anytime soon. I'd have to see something drastically change. I'd have to see them have real success with electric vehicles for me to really get excited about Ford. But for now, I'll just continue to be invested in Tesla. But anyway, I'm wishing all the Ford bulls all the best. I know I have a lot of viewers who are invested in Ford because they always ask me to make videos about Ford. So I'm wishing you all the best. I'm wishing all the Tesla bulls the best too. I hope we all have a lot of success. But anyway, I hope you guys enjoyed the video. If you did, make sure you hit the like button. That lets me know that you guys want to see more individual stock analysis videos in the future. And if you want me to review any other stocks, make sure you let me know down below. Thank you so much for watching. I'll catch you guys in the next one. Share your thoughts down below. I'll see you later. Bye-bye.